Hello and welcome to this week's crypto update. So what's been happening out there? Well, there's certainly a lot happening in the macro space, and indeed lots happening within the crypto space, in particular with Bitcoin. So of course, in the last week, we have had the Israeli bombing of Iran, and then indeed the Americans adding to it, landing buster bombs down to try and take out one of or a number of their nuclear bases. So, of course, this has created massive movements in the stock markets, all risk on assets, and including crypto as well. But since then, we have seen a peace deal being organised, which of course is good news. And this has had, of course, a positive effect on all risk on assets. So, what's been going on? So, as one might say, is who knew the combination of tariffs, an Iran conflict, a hawkish Federal Reserve, and the underperformance of the Magnificent Seven would push the stock market back towards record highs. You would say any one of these things would potentially pull back the overall market. And of course, there was pullbacks. But despite all of these various potentially negative things happening for risk on assets, we still see the stock market moving towards all-time highs, and Bitcoin, of course, moving towards all-time highs. So what's going on? Well, of course, number one, the driving the momentum has been a series of tariffs negotiations. So on the tariffs overall, most people saw that as a negative thing and something that would probably cause inflation, and that would have issues, which I'll touch on in a second. But it would have been seen as negative to risk on assets. But of course, we've seen a series of tariff negotiations and de-escalations, as well as peace talks between Israel and Iran, brokered by President Trump. So we've seen what's seen as less risk on the tariff side, less risk on the war side, and on top of all that, many people believing that rates are going to come down in the not too distant future, many now pointing towards September. So we see more trade deals may be announced before July 9th, because that's the 90 days that they gave for various countries to have a negotiation done. And of course, there's a couple of weeks towards that deadline. So let's see if there's more announcements coming out in the next couple of weeks towards that timeline. That will certainly be interesting. But of course, we could get to the 90-day timeline and deals are not done. And what happens then? Will they extend those timelines or will they apply bigger tariffs to various countries if deals haven't been done? So again, plenty room for uncertainty moving forward. But the market seems to be taking this all as a positive. On top of that, a weak US dollar too has fueled stocks. So a weak US dollars tends to be positive for most risk on assets. Why? Well, such a backdrop will serve as a tailwind for tech stocks, as overseas sales account for over 50% of US tech companies' revenue. What's that mean? Well, if they earn the revenue in yen or euro or other countries around the world, while the dollar is weak, when they convert those funds back into the dollar, they get more dollars, which means they then in turn that can benefit their company. That's of course all priced in dollars. So I'll come back to all of that. What's been happening in Bitcoin? So the big news that has come out in the last couple of days is mortgages and Bitcoin. What's happening? The FHFA director, Bill Pollitt, has now formally instructed Fannie Mae and Freddie Mac to prepare proposals for counting cryptocurrency as qualifying mortgage assets. Wow, this is big. What does this mean? The FHFA just told the two biggest players in the US home lending to treat crypto like cash on the balance sheet. Bitcoin surged past 107,000 on this news, and this marks the first time the US government is considering crypto as mortgage collateral without needing to convert it to fiat. So in the past, if you wanted to buy a house, but you needed, cash in hand or money on an account, and you had crypto, you would have had to sell, let's say, the Bitcoin, convert it to cash, put it into your account, put that against getting your mortgage. Well, it doesn't look like that's going to be the case for much longer. The FHFA says crypto assets must be held on a US regulated centralized exchange, leaving self-custody wallets out for now. So in other words, what this means is it needs to be on an exchange that they are regulating, that they trust, and that is then used as collateral against your mortgage. But this is still a huge move forward. Which cryptocurrencies are they going to accept here? Well, they haven't announced that yet, but obviously Bitcoin is going to be one. But which others are, will there be any others? It's my expectation that it will be Bitcoin and Ethereum initially. And I think they'll probably use the bar of which cryptocurrencies have ETFs. So obviously Bitcoin and Ethereum have ETFs right now. It's expected in the not too distant future that we're likely to have a few more. Probably the likes of Solana, probably the likes of Litecoin, and probably one or two more. And so I believe they'll probably use that as the gauge as to which cryptocurrencies can be used to against getting a mortgage. But this is still huge news. What does this mean? It actually means that if you hold, for example, Bitcoin, instead of having to sell it now in order to potentially buy a house, you can actually keep your Bitcoin, use it as a collateral, buy the house, but you still keep your Bitcoin. What does that do? It reduces another area of sell pressure for crypto assets. This is huge at a time when institutions around the world are continually coming out buying more crypto. We constantly see more governments, states, and institutions talking about creating Bitcoin reserves. The demand for Bitcoin is just continuing to grow and by more and more long-term holders. Once they buy it, it's unlikely they're going to sell it. And now that you can borrow against it, both not just in a decentralized way, but in centralized banks, this is going to, I believe, create even more demand for it and less sell pressure. And of course, over time, that should lead to upward prices. Doesn't mean there won't be volatility. There is lots of volatility still in the marketplace as far as I can see. We still have uncertainty around the relationships between Israel, Iran, and of course the US part and all of that. We still have uncertainty around tariffs. We still have uncertainty around rates. So there is, and of course, uncertainty around the US economy and what that might mean around the world. So certainly it's not clear sailing, but there's huge positive news out there. So where does all the market optimism come from? Well, number one, there seems to be tariff amnesia. People have forgot that they're even out there. Maybe that comes to a head between here and the 9th of July. You know, maybe we see loads of positive announcements, which of course will be very positive for the overall market, or maybe not. Uncertainty. As regards rate cuts, most people are pricing in the idea of the first rate cuts coming in September and that there would be at least 2 this year. That, of course, has a significant chance of happening, but it will all come back to the interest rates and inflation. If inflation holds or continues to move down, then that's one box tick that would allow the Fed to reduce interest rates. If the overall US economy is looking like it needs help, that's a second box ticked to allow them do that. I believe that has been happening for quite a while. I believe that they are going to have to reduce interest rates if they're looking at the economy on its own. But when you take interest rates and inflation into account, if inflation starts ticking up, this will cause the Fed to probably consider pausing for much longer. If, however, it continues to come down, then the door is open for them to start reducing rates. And at a time when it's highly likely that the big beautiful bill of Donald Trump, that's going to add even more debt to the US economy, it's going to be even more pressure for them to reduce interest rates because the cost of servicing the existing debt, not to mind the additional debt that will come to the table off the back of that bill, will put even more pressure on those rates being reduced because this would reduce the overall cost of that debt. So huge pressure on that. So it is highly likely that that will happen over time. But for the Fed to do that, inflation is going to have to continue coming down. Is that going to happen? We shall see. But lots of uncertainty out there. In general, as things stand, it looks like the door is opening for Bitcoin to move higher and risk on assets. Plenty of volatility out there. There will be some surprises along the way. Watch the space to find out, and we'll keep an eye on it as we go. Hopefully you all found that useful, and we'll talk to you all on the next one.